Welcome back guys, Harry here, known as Trade Sharp, and in this video we're gonna look at how impulse entries are actually not impulsive and how they're not supposed to be impulsive. I know it's a popular term and a lot of people mistake them for what they actually are. Now, to be impulsive means you do something without much thought, but that is the exact opposite of what you're doing. So in this video I want to kind of clarify how impulse entries are supposed to be taken and what is the fundamentals of impulse entries and how they're actually not impulsive and they actually need confirmation. So with that being said, let's get straight into this video and straight into how impulse entries work. So guys, as always, before we start the video, can you please do the necessary and leave a like and subscribe? I can't tell you how much this helps. If we can get this video past 100 likes, I'd really do appreciate it, and tell me that you guys are enjoying this content, which will keep me motivated to make more. If you're new to this channel, there's so much content on this channel. It's basically a free course, and that's what I designed it to be, to give you guys value. If you're coming back, leave a comment, let me know if you liked this video today or have a question. And if you're new here, I also have two groups down below, a Discord and a Telegram. They're both free groups where I send my daily analysis. You can ask me questions, send in your charts, see if you agree, or any questions you may have. There's a whole community there that can help you. And as you can see, I send my analysis in there. So yeah, feel free to join that. And here's my Instagram in case you want to follow to be updated on latest videos and any trade updates and stuff like that. So that being said, let's get straight into the video, all of that shilling out the way, and yeah, let's get on to the important part. So by textbook, and what they're known as is basically where you enter without any confirmation. Say you have a candle looking something like this. The reason I'm looking up is so I can get a drawing tool. Let's say you have a candle looking like this and you have a range. So let's draw a quick range here. So you have a range, something looking like this, and an impulsive entry would be someone who just takes an entry as you break these highs. Oops, that's the wrong color, so let me just draw. So impulsive entry would be if you see this candle pushing up like this, you would just enter right here at the break of the highs basically. So as these highs break, you would enter, and that's your impulsive entry for no reason. So that's the idea of an impulsive entry, but to be honest, there's nothing impulsive about these entries. You can't have an impulsive entry without having any confirmation, right? You have to have confirmation, and you have to have a setup that you back tested and have gone over again and again and again and again. And you need to have data based on those setups. I have Excel sheets that I've shown in previous videos. I'll probably link the video where I show that Excel sheet. Of all the data of my setups, what are the win rate, what is the probability. So trading is a game of statistics and probability, and impulse entries, if you're just entering at random places at the chart, you're not going to be able to have the highest probability or know what is your chances of this trade playing out. So impulse entries won't work like that, but what they do work is when you don't always get a closure, right? So sometimes we don't get closures because if you notice about price action trading, and when I explain the price action trading, you see we look for closures above ranges, closures to indicate support, but sometimes price just pushes through. And a clear example is somewhere here, right? If you're looking for buys above here, I mean, there is more advanced entries where you could have entered lower on the chart, but let's, as an example right in front of us, if you wanted to enter above here, this closure is too big. You kind of missed the opportunity here. That's a 78 pip stop. It's going to be very, very tough to enter here. So what are your options, and this is where impulsive entries can make a difference. And what I mean by that is that your confirmation actually comes all the way down from here. Your confirmation comes from the higher time frame candles, and all you're looking at is a spot to enter. And how this works is with specific setups. So I'm going to go over those setups and how you have to approach impulse entries. So let's take an example here. We come to a session, all right, and our session is an uptrend like this. So that's an uptrend here, and this is how the session looks. We have a daily candle bullish, very important. The previous daily candle closed bullish, and the previous 4 hour also closed bullish, all right. So if we look at the 4 hour time frame, the 4 hour daily will look something like this. This is how the daily time frame will look, and the current daily is maybe somewhere here like this. This is the current daily, all right. So we see the current daily something like this. So that's the daily time frame, and the 4 hour time frame looks something like this. So we have a 4 hour candle closed bullish, and the new 4 hour is just about to break the highs, for example, like that. All right, so that's the 4 hour time frame here. So this is daily and this is 4 hour. So to make it clear, I can even write that, and we can have a look. This is daily, and this is the 4H. All right, so that's how it's looking now. So we understand that, okay, since we have a daily bullish, and this is the current daily candle, and the 4 hour bullish, that means that we should be looking for buys here, okay? In our session, we have something that looks like this. So I'll just draw it quickly. So let's say now we're looking for buys, and we go down to the, for example, 15-minute time frame. So this is the 15, all right? So we're on the 15-minute time frame here, and we see this. Now, we can't take a trade like this. This is the current 15-minute candle. It's moving up and down. We don't know what to do. Now, the issue is we can't take a buy on this because the stop loss is too big. This 50 pip stop loss. We can't enter above the highs because this is not our session, and also there's a resistance here to the left. All right, so pretend that there's a resistance right here like this, and we're reacting at that resistance here. All right, so we closed above this resistance, and we're reacting at a current resistance. Daily is bullish, 4 hours also bullish. So we know in this session we should be looking for buys. So our confirmation for buys have initially come from the daily time frame, and they're also coming from the 4 hour time frame. Why? Because the 4 hour is bullish and the daily is bullish. Session structure is bullish. So this is all confirmation. Nothing is impulsive here. There's nothing we're doing that's impulsive. Now, what's very important, when we come to the session, price is closed above the range here. So there's no entry because stops are too big, but price is closed. This closure here is the confirmation that price wants to continue up. There's no price closing below the support. Price is closing above. So this gives us the confirmation. But where's our entry going to come? So let's say this candle closes bullish here, rejecting the top here. Basically, this is showing us that price came down, rejecting. Yes, it's at resistance, but what we can do is we can enter as these highs break here. Why? Because this is where price is going to continue. If you imagine if this candle just closed and we had a stop loss below this candle, where's the entry going to come? At the break of the high. So your entry becomes not impulsive, but it becomes without any confirmation here. There's no candle closure and then you enter. No, this is breaking the high of a previous candle. So what you would expect to happen here is you would expect price to do something like this. So you'll have a buy stop probably at the highs here. You want price to open up, wick down, not break these lows, respect the lows. As this candle starts to flip, boom, it will trigger your order, and you expect price to end up looking something like this, and that's how you catch that entry there. And this will be your entry towards this move. And essentially what this becomes on lower time frames is this is actually a range here. So we have one range here. Price breaks out of the range, can't take a trade, stop loss too big, but we create a smaller range here with this confirmation, and we enter at the break of the high. But what's very important here is there's a lot of confirmation here. You can see there's confirmation from this candle closure, confirmation from the 4 hour time frame, confirmation from the daily time frame, and confirmation from session structure. All of these things are giving us confirmation as to why to take a trade just breaking the high. Now I'm gonna go, and now I hope that makes sense. And what's very important is this exact setup here is a setup that I take often because it's back tested. I test this when we get a closure and we create a candle that looks like this and breaks the high. That is a setup that's tested. And how do I know this? Well, in the Discord channel, I made a free PDF, and there's a video where I talk about 3 really effective price action entries, and in that video this is one of the entries. So if you look here, these are the PDF. This is for free in the Discord, so you guys can check in resources, you can go see. So here you can see entry number 3 is here, right? That the reason it's called an impulse entry is because you're entering impulsive, but there's nothing impulsive about it, right? So I probably would change this because it's not an impulsive entry, but none of my entries are impulsive. I just don't enter at random places of the chart. There's always confirmation. So this is an exact example, and this is back tested, and I have data on this. So if you watch the video, there's an Excel sheet showing, I think this was around a 75 to 80% win rate on this current setup. So now let's go have a look on the charts at some real life examples. For example, here, the same example I drew, we have a resistance here, right? We have the next resistance is going to be up here at this spot here. So this is your next resistance here, like so. And we have here an LTA, which looks pretty good, to be honest. You can argue that this is a resistance here as well. So we're just somewhere to keep. There's no entry here. Price closed above, too heavy here. Too heavy, it closed above. There's no entry. right? We can't enter above here, it closed too heavy. Now notice this time, this is 1 o'clock for me after London session. So we need to be looking for an entry around 2:30, 3 o'clock, where the volume will start to come in pre-New York, right? So what ends up happening, we can't enter here because this is how our trade position will look like. If our target is going to be the next maximum resistance here, right? You can see the stop loss is not even a 1-to-1, right? It's barely a 1-to-1, okay? So that doesn't make any sense to take that trade because you don't even know. And your realistic first target is somewhere around here. So what ends up happening is here, what do? We create a range. Now we get this candle closure. This is a confirmation of candle closure here. You can impulsively enter at the break of the high, but this is just one candle closure, but the next candle gives us great information here. All right, what happens is we pull down, reject the support, close here. Where's your entry gonna come? Well, as I drew before, your entry is gonna come at the same volume time. So what time is this? This is around the 3 o'clock candle here. So you're gonna enter at the break of the high, and the stops can now go below here, and your target will be all the way up here. So now we're looking at a better risk to reward, and this is how the trade is going to look when you enter like this. But you have to enter at the break of the high, but the confirmation came from this range breakout and creating this consolidation above. That's where the confirmation comes from. So now let's go look at more examples here. All right, so if we look at this example, for example, this is a great example. So a selling example, they don't always have to look like the one that I showed you. We have a clear support here, that's macro support. Here we have this support right here. So what ends up happening here? What ends up happening here is that we are in a bearish trend. Everything's bearish. We create a range, we close below the range. There's no entry at this closure below the range because, again, huge stop loss, 71 pips. So how are we going to enter on this move? Price creates a resistance, rejects the zone again. It's rejecting again, but there's no entry till we break this low. Price finds a resistance here. Once price finds this resistance, this is a lower high. But the problem is you can't just take the trade from here to this support. That's 6 pips. It's nothing, right? So what do? You take it at the break of the support, right? So your entry will come at the break of the support. You target next structure or whatever your target will be, right? Based on what you have, and your stop loss will be above the previous candle high. And this is just using all 30-minute time frame here, right? So previous candle high, you enter at the break of this support and you target whatever structure you have down below, blah, 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 so on. Now, the reason why, now this is known as impulsive because you didn't wait for the close below the support. There's no close below the support. But this is not an impulsive trade. The confirmation came from this candle close here. This is only a retrace, finding more resistance. So this is actually giving you more confidence than just taking it on this candle close below the range. So this is actually a better entry than entering, but people call it impulsive, but there's nothing impulsive. This is finding resistance below the range, right? If you look at, we look for, say we want to look for sells below here, but we want to look for resistance. This is exactly that. Pull up, resistance. That's the type of entry. So yeah, this is a very interesting video, very key video, and I hope this cleared up that impulsive entries aren't actually impulsive. You need to have confirmation. Now, there are specific setups, but I can't really go into those setups in depth. Otherwise, this will be a very, very long video. There's a lot of different, timings. You have to enter during volume. You have to look at how the chart ends up, what's happening, what is price doing. Is it a 4-hour high? Is it a 4-hour? There's a lot of things that get into there, and I really can't share everything because it will be very, very complicated. And this has taken me some time to learn, so I'm not just going to splurt it all out. So I hope you guys understand, and I hope that this helps you and clarify that impulsive entries aren't actually impulsive. So with that being said, take care, trade sharp, and until next time, peace.